The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're hoping to have our good friend Bill Meridian of Cycles Research from Vienna, Austria on today. And I think that'll be always fun to take a listen to what he has to say, especially since we've got gold here making 17-month lows. Silver just about made that $15 price level, folks. We got down to $15.05. So keep an eye on that silver. It looks pretty interesting from these levels. Now, of course, most of the stuff in the news is related to these foreign exchange things that are going on. And believe me, folks, the amount of money that is traded in the lira is not a lot. So when you see these wild moves, they are accentuated, and believe me, they do come to the table once they start to move. I want to bring this chart up here of the lira going back the last 18 months, but you'll notice once it went above 5, that's when it really started to accelerate, and that's the key here. We've been over these last 4 or 5 days, we've gone from 5 to 7. That's a huge move, and that's one of the thing was looking at what was wrong. Yes, Norm was on Friday. I had to double check with TFNN. I'm sure he's still in the archives, but we'll see. Anyway, if you look at that the Turkish lira, you'll see that it had a straight up move. Now, what I do, I don't trade the lira, but I watch it because I know a lot of people are paying attention to it. I frankly don't know only 2 people that I know that trade this Turkish lira. I have a student in Istanbul and I have a student in Ankara, and both of those trade it. They've done extremely well over this past week because they were buying that breakout above 5. Now, if you're not, unless you're traveling, it's not going to make a lot of problems for you, but it's going to be a problem for the economy because this is how they wage economic war. If you read anything about Thomas Jefferson, I think one of his quotes was, you can have your standing armies, let me control the money supply and your currency, and that's pretty much what's happening. They're fighting. Now, if we take a look, I want to quickly look at the ruble here because we have the same type of situation here going on in the ruble, only it's not nearly as dramatic as it is. And what it's doing is it's putting pressure on these economies, to come to the table to make negotiation a little easier. That's my 2 cents worth, and so we're done. We'll better watch what. Yeah, you're right. They could change the rules anytime there. But believe me, that's a small country, so it could certainly do what's going on. Folks, let's get on to the real world here. What I think is really important here. I want to share with you 2 charts that I think are extremely important. First of all, comes from me. I want to bring it up just to show you. This is the NASDAQ, and it's also the New York Stock Exchange Index. The NASDAQ is the one in blue. You'll notice how the NASDAQ has been extremely strong compared to the New York Stock Exchange Index. The New York Stock Exchange Index made a perfect 61.8% retracement last Thursday, and it had a gap down. It would be slightly lower, I guess, this morning, but not by much. But that's the one I wanted to show you. But the real chart that I think is real interesting, we get from our good friends over at Elliott Wave Theorist, and in one of our good friends here at TFNN, Mr. MR, was kind enough to send this to me because I would have liked to have done this chart myself, but I'm not able to put 2 charts on one and do it as dramatically as this is. So I'm going to use the Elliott Wave chart here. Now, this is not Elliott Wave theory. All this is doing is showing the relationship between January of 2018 and September of 2000. If you'll notice that the high that we made a higher high. If you notice those little blue arrows, those patterns are very similar, folks. And when you look at the relationship that we've had between the NASDAQ and the S&P 500, or the New York Stock Exchange Index, you can see the relationship. Now, what I'm going to say next, I had someone check for me, and I literally couldn't believe it when they told me. Folks, do you realize that 84% of the move since January in the S&P 500, 84% has been done by 4 stocks. 36% of it has been Amazon, followed by Microsoft, then followed by Apple, and then Netflix, and then finishing 5th and 6th are Google and Facebook. So 6 stocks are almost 90% of the gains that we've made. Now that is not good breadth in the market. So this market is far from technically sound, because you've only got a few stocks that are doing this, and you can see what happened to, Facebook losing, 20% in a matter of a few hours when things didn't quite go the way that they should. So that's a very important concept. So let's watch that very, very closely. Now, I had one other question that someone asked me, and that was on this S&P 500. I wanted to bring it up here. This is the E-mini S&P, and the question was, the pattern that you're seeing there, you'll notice the ABCD structure, and the question was, is it 3 drives to a top? Well, if you go by the definition, you're not making a new high, you're making a double top, so that doesn't really fall under the perfect definition of a 3 drive to a top pattern. But that's certainly a tradable pattern, folks. Look at it. You've got a beautiful ABCD. You've got 2 1.618 expansions. You've got beautiful time symmetry. You've got 38 days between each high, and we've already heard our good friend Stan Hartley talk about the importance of that day. So that's why they're relatively important. So the definition of the pattern itself depends on the parameters that you give it. The thing that you have to do is how much you have to risk to see if you want to be right, and that's the key to what we're watching here. Now, we have to focus a great deal this morning because we've only got half the show, because Bill's got some great information, but we really want to spend some time on the U.S. dollar index. Let's get it up here to take a look at it, because what we've done now with the U.S. dollar, we've talked about this many times. You'll notice that we finally broke out above those parallel channels. Once we got above that 95.50 level, we did hit the high today at the 1.618 expansion at that 96.60. Whether that's going to mean anything or not. Now remember, since 2017 in December when we made a high, we're still in a downtrend, but we've been in a very strong uptrend since January. So let's keep in mind that that's one of the things that we really want to look at. Now, just to go back to history books a little bit, I want to bring to your attention, because this is something that I really was involved in, and well, everybody at TFNN was. And this was back in 2011. Tom O'Brien came out and he coined the phrase King Dollar, and that's when the dollar was trading down there at around 73, 74, and then it went all the way up to 103, and we're trading at just about 97 right now, close to 97. But it's a really huge pattern, folks. And that's the kind that, and you'll notice that that bottom that we made there in 2011 was a beautiful ABCD 3 drive to a bottom. You notice how each of the bottoms is smaller than or a little bit lower than the other bottom. That's what you're looking for. And that's the kind of pattern that you like to see. But I wanted to bring this to your attention because this was something that he hung his hat on this. And remember, he stayed there for 6 months when it was trading at 74, and he never gave it up. And it really had a hell of a move. So let's take a break here. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I posted the chart of the Christmas corn, December corn. We had the crop report come out Friday. It was very, very bearish. As you can see, we're down at the 61% retracement level, within a penny away at 365. We're trading 366. Preferably, this D-score looks like a buy here. Actually, we're into this area where the eclipse could be having still some effect, but basically it was that report. Soybeans really got hit hard. They were down more than 60 cents a bushel. We made 60 cents a bushel on the way up. We bought it at the 61% retracement and put a stop below that 78% level. So we're going to have to risk about 20 cents on that. But if you make 60, give back 20, you're still up 40. So we'll have to wait and see. But the Christmas corn should have some pretty good support here. And then I would put the stop below the below the contract lows, because that 3 drive to a bottom, should hold. The one thing that I feel very strongly about is the world is not going to stop eating. That's for sure. Now let's take a quick look here at the metals for a second, because with the euro and the dollar moving like it is, it's pushed the metals lower. We've made new lows now from July of last year by about a penny in the silver. That completes that big ABCD pattern that we've been waiting for. That happens to also be a 78% level on the long-term weekly chart in silver. So we are over the major support, in the gold market. Now, I wanted to bring this to your attention, because this was also from the Elliott Wave newsletter, because it shows the sentiment. And the reason why I like to share this, I know Bob, and Bob Prechter, he's a super guy, does great work, but he's got some really good charts. Now, this has nothing to do with Elliott Wave. He's got the counts up there, but we don't look at that too much. But what I wanted you to see here is you'll notice that there's a really strong possibility for a rally here, because look at the sentiment. We've been down here for well over 3.5 months here, and we're almost, right at that 61%, the 78% retracement on the whole move. That's, this is not a total collapse like Bitcoin or soybeans or anything like that. This is just a normal correction that we've had, since, early February. So this still looks bullish to me. And if this sentiment is correct, you're going to start to see gold have a pretty good rally. Now, usually when we have things going on with the currencies like this, it is, it's, Katie bar the door and gold goes nuts, because the old rule is he who owns the gold makes the rules, but that doesn't work too much. Back in 1983, when I was trading on the floor of the exchange, the currency pits were rather small. They were about a third the size of the T-bill pit and the Jenny May pit and the gold pit. The S&P pit was even, well, it didn't even exist until April of 1982. But by 1983, it was a little bigger, still not as big as the currency pits. But whenever something dramatic would happen in the currencies, they would be backed up. They would be belly to brisket there. In other words, it holds about 50 traders into a pit, and there would be 150 to 200 of them. And the reason why I'm bringing this to your attention is one morning, I got in early every morning. I was probably the first trader in the building. And I always brought in bagels or donuts for the group at Mary Lynn's office. And what I noticed was I looked down onto the floor, and the pit for the Swiss franc was absolutely filled. You couldn't even get a spot. And the market didn't even open for another hour and a half. And so I went down to check what was going on, and there were some shenanigans with the central bank in Switzerland. They changed some rules, and the market was going to go absolutely crazy. So everybody was trying to jockey for a position. Now with trading the way it is now, they don't have to do that. They can trade off of their desk, their boat, their plane, wherever they want to. But they do come to those markets when they're going crazy. And, when you see something like what's happening in this Turkish market, you really have to respect it, because they have tremendous moves. But it does follow patterns well, even though it's a relatively thinly traded currency. The same is true with the euro, and not the euro, the ruble. The euro is by far the biggest. That's the biggest thing traded in the whole world. But those are just some comments that when these players come to the game to play, they're there and they make these tremendous moves accentuate, and that's part of what's happening, and that hurts the economy of Turkey, and that's what the overall premise is to make them may have a little bit of pain, and maybe they'll make some changes. But whether that happens or not, I don't know. We've got one other one that is really at the moment of truth, one of the majors, one of the big three majors, and we just hit it just a little while ago down at that 110 level. We've had a pretty good move here, a beautiful Gartley form up here at this right near the 110 level this morning. So this could be a really big move to see if this is going to hold from here. But any move below 110 now would be a relatively negative thing from looking at the yen. But overall, these currencies, this is really important what's going on. Folks, just take a look here at the long-term monthly chart here of the euro, what it looks like. This is just the long-term monthly. This goes back 30 years. You notice the last rally we high up that 125 level is right at a 61% retracement, and also it was a 382 retracement off of the high from 2008. The ABCD structure from 2014 takes it to 91. So you've got some. If we're at 114 to 91 is a big drop. So these things can happen. In order to show you the relationship here, take your eyes and move it over to 2000 and then go up into 1997 and look at that ABCD pattern that I've highlighted in blue. That's exactly the same pattern that I've highlighted in red. All I did was I shifted it over and changed the color. So that's a real interesting to watch. So we're in a definite bear market here in this euro. So keep a close eye on it, because this could be a game changer for a whole lot of different things. It's very, very important. That's how I see it. Whether that means much or not, I don't know, but that's what we're keeping an eye on. The same thing is true now if you look at the dollar yen on a monthly basis. We'll get this up here so you can see it. You'll be able to see it. I'm bringing these monthly charts up. I never trade these. I just look at them because this is where we could be as far as ramifications on our currency. Because if the dollar gets real strong, that's going to it's going to be a big advantage for the U.S. because their dollars will buy more from things, but people are going to have to pay more for ours. So our exports, like grain and stuff like that, will have to be tamed back a little bit, but our exports are going to be cheap because we got corn and soybeans at sale prices as we look at it right now. So those are just a few of the things that I think are really important for today. We're going to have a break coming up here in a minute, and hopefully we're going to have Bill Meridian on from Cycles Research, to give us an idea of what he's looking at here. But it should be pretty interesting to see how these things are going. One other one that's real interesting, folks, for those of you that like copper, take a look at this. Whoa, didn't quite turn out the way I wanted. Just give me a second here. I put the copper chart up right at major support.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Bill Meridian, Cycles Research, Vienna, Austria on the line. Bill, are you there?
Yes, I am, Larry.
Hey, finally, technical analysis at its very best. How are you, buddy?
Okay, Larry, how are you doing?
Very good. You want to tell us what you're looking at today, Bill?
Yeah, I sent.
Yeah, I've got the first. I've got your first graph up. We're looking at basically FANG stocks, gold stocks. Why don't we start there and see what you got?
Well, I have the page before that is to today's perspectives, and I threw up the FANG stocks because we were supposed to do this a couple of weeks ago, and that was based upon the article I had written for Forbes. And then 1 week ago, I wrote up the lesser FANG stocks. Gold, I think, is likely to peak. Stocks, I think we're in a shallow correction. Bonds are likely to rally. I have something to say about 2019, and I just wanted to remind you that my new book is available. So let's go down one slide now, the FANG Outlook from Forbes. The first link is the link from 2 Sundays ago. The second link is some of the lesser FANG stocks, Baidu, Twitter, Tesla, and Alibaba. So I have not changed these graphs, by the way. So if we go to the first graph,
You betcha.
this is Netflix.
Mhm.
Now remember, this was 2 weeks ago when I was supposed to be on. I did not change that at all because Netflix did rally. You see the graph ends at the end of July. It did rally and it tops this week. And I would take that as a serious top for the following reason. Let's go to the next slide and look at Netflix. That's a weekly graph you're looking at. Let's look at the monthly cycles. And this tells us that Netflix is at some sort of a serious peak, and the stock is probably not going to show another sustained advance until sometime next year. And let me tell you what I think is going on. One of the reasons I liked Netflix was because, as you might recall, Larry, I used to be in the computer game business. And computer games are something people buy when they have lots of leisure time, the economy is not very good, and they don't go out very much, so they have to find lower cost forms of entertainment at home. And I would throw Netflix in with the computer games in that regard. Now with the economy recovering, I think people want to spend less time at home and more time out. And I think this is a problem that Netflix was just introduced to at its last earnings report when the stock sold off. And on top of that, some Wall Street analysts tell me they're very dependent on Disney for content. And if anything goes wrong there, they then don't have any content. So I'm taking this sell signal, which the weekly one kicks in now, as important because look at the monthly cycle.
Mm-hmm.
That's the story on Netflix. So
well,
let's
it's
go
certainly acting that way, that's for sure.
Let's look at the next one. Facebook, FB. I did not predict this steep drop in the stock, but notice it did occur after a red line. The red lines are sell signals. And I did predict a recovery up till, again, right around now. That cycle peaked, well, yesterday, Sunday, which is now. So I don't believe that the Facebook decline is over because, as we know, declines usually occur at least as ABCs, of which that A wave was that big drop. The B wave, I think, has just been completed, and the C wave is about to begin. And the C wave has to be at least, I think, equal to the A wave, but usually longer, which would carry it below $175 a share. And on top of that, I can add in, I have an article that was published by the NCGR that shows in the horoscope of incorporation, the moon in Facebook's horoscope is, I think, 7 or 8 of Cancer. And when Facebook's incorporation date, Facebook's first trade date, no, I got that mixed up with when Facebook first appeared 14 years ago on the Harvard campus. The incorporation chart and the first trade chart all have important sensitive planets around 8 degrees of Cancer or Capricorn, which is where Saturn just stationed. Now, Saturn's not going to return and go back through there until late December. So I think the pressure is on. I think, in addition, I do not think the fellow who runs it is really capable of running such a large enterprise on his own. It strikes me as being a bunch of young kids who are in control of something very, very big. And I think they need new management in there. So Facebook, I've advised my clients on this rally to sell it right here and revisit it maybe in the first quarter. So those are the two. Now, the other FANG stocks I'm not mentioning because I really don't think there's much that's going to hold them back. Google, Amazon, and especially Apple.
Okay, that makes pretty good sense. Bill, I don't know if you remember this or not, but 25 years ago, around 25, 26 years ago, you and I were together in Singapore giving a seminar, and you were explaining to me about your games with your war games. And I was so blown away because you did such an incredible history of wars and how they related to these games. I mean, you were way ahead of the people that are doing this kind of stuff, and my hat's off to you, because I thought that it was a waste of time, but after I saw what happened to it, I was totally shocked. But you did a great job with that. That was really incredible.
Well, thank you. And last week, one of the guys who was responsible for my knowledge, Jim Dunnigan, who was the founder of Strategy and Tactics Magazine and Simulations Publications Incorporated, he has a website called strategypage.com that I refer to frequently. And he last week I copied the piece that West Point and different military training academies are all switching from lectures and movies and books to conflict simulations, which means war games, because they find the lessons stick in everybody's heads better. And we knew that back in the late 60s. We knew that back in the 70s.
Wow. Yeah, that's really cool. I wish the folks could see what you did, because it was really exciting. Let's talk a little bit about the gold market here.
Yeah, sure.
We're coming down. We're making 17-month lows. What do you see here, Bill?
Well, it looks bearish to me, and I did not change this either, because the red lines are the sells, the green lines are the buys. Well, the last green line here, you'll notice that, as they say in the books, Larry, a sideways movement can be a correction. And basically, gold's only gone sideways after that green line that you see on August 1st. And where are we right now? August 16th, which is in 3 days. So the cycle is turning down. And it hardly rallied. The last 2 buy signals, gold just went sideways. That is a very bearish sign. And I'd like to finish with the cycles before I talk about anything else. Let's go to the next page.
This is the monthly?
That's the monthly.
Okay.
And you'll notice the monthly also pointed up, but it topped on August 13th. Mm-hmm. And that's all you got with both the weekly and the monthly. I mean, it just went sideways. Yeah. So now it looks like it's going straight down. And what is especially bearish is that August and September, the 2 months, if you measure from 69, they're the 2 most bullish months. And if this is all the action you're going to get, in the months of August, and if September is flat too, this is exceptionally bearish. Mm-hmm. And I'd like to borrow. So where is it going? I'd like to borrow from Tony Plummer in London.
Sure, he's the Elliott Wave guy of the UK, right? Yeah,
that's right. Well, he said that he made much of this, and I found it to be valuable. If you take gold's starting point at being $35 an ounce way back in 1933, and you measure up to the top, which is I think $1,911 in September of 2011, and he said it's going to the 50% area probably, which is like $850, $900 an ounce would be a 50% retracement.
Wow, that's a big one. Let's pay a few bills, and we'll be right back with Bill Meridian.
Go ahead and do that.
Thanks, Bill. We'll be right back with you. 877-927-6648.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and we're talking with Bill Meridian of Cycles Research. Bill, let's switch over and talk about this cycle for the S&P on a monthly basis. What are you looking at here?
Yeah, well, right now I think we're in a corrective phase until the end of the month, until about the third week of the month. But I don't see much wrong with the stock market. And over the weekend, I read a number of studies. There was one very good one by Sentiment Trader, in which they said the sideways consolidation that we're in, they count about 32 of them. And, you know, Larry, a sideways consolidation, we both know, can be a base for another liftoff. That's what I think this is. Mm-hmm. And that liftoff, I think, will be triggered by the midterm elections, because the 15-month period beginning in October, just prior to the midterm elections, out to the end of the next year is one of the most bullish cycles in the U.S. stock market. But the period going into that, if you only invested in the months leading up to that, that's very choppy and very doubtful. And that's where we are now. And right now, I think we're going back down toward the bottom of the range. And you can see that in the next slide. Mm-hmm. See, you broke out of that big triangle. And as we all know, straight out of the textbook, it's going to go the height of that triangle, you add it to the point of breakout, and that's where we're going. Well, we haven't even come close to that yet. But the pattern, look at the lower highs in momentum, the red line below the price line. So I think the most you can come off here is probably the 2750, which would be the top, if I extended that blue line, the top line of the triangle.
I see that.
So yeah. I don't think you've got much risk to the downside. But if you're a bull and looking for the market to go straight up here, I don't think you're going to see it. I think we're going to go down right now until about August 23rd or so, and then rally up again, and then go back down again in September, and then finally take off after enough people have been frustrated in October. And I'd like to point out there are a whole mess of sentiment indications here. I'm trying to, I always forget these guys' names. The survey of portfolio managers, they've only kept this for about 18 or 19 years now. But it shows they are 200% invested, and the most bearish manager is 28% long. Mm-hmm. That, if you use that, if you look back at past similar readings, it's actually been followed by higher prices, because these are the best educated, the most experienced people in this survey, National Association of Investment Managers, NAIIM. And so that does not work in a contrary fashion, and that's the condition right now.
Bill, do you take any account to the fact that, since January, there's the four stocks, Amazon, Microsoft, Apple, yep, and Netflix, have, they're 84% of the total value of the increase since January. Does that mean anything, the diversification that's not there, or what?
Well, it's nothing different. If you check it back, it's not too different from past markets. And I wrote a piece on that 2 weeks ago, and I pointed out that this is not any dissimilar. I compared it to past bear markets, and I keep an eye, I don't have a picture of it, but of the value line index, which is 1,700 stocks equally weighted, and that's hit a new high. So, being a former value liner, I appreciate that stock. It's like the advanced decline line is also at a new high. So.
Well, well, it makes good sense because the market knows more than most people, so that's for sure.
Sure does.
What about the interest rate market here? You want to give us your idea of what you're looking at here?
Well, this is a histogram from 1982 to the present of the expected return. In other words, the probability that the bond market will go up in that month multiplied by the percentage change. And you can see where we are here, July, August. Look at those two bars. These are two of the strongest months. Sure. So that's number. Now let's go to the monthly note cycle, Larry, which will be number 12.
Okay, got it right here.
And it's gone straight up to a peak, so it might pull back here into the end of the month, along with stocks. But basically, I don't see any problem here. I think we're still in a longer-term bear market, but right now we're going to rally. So I don't see much difficulty in holding bonds.
Well, this next section, I'm sure, is going to get everybody's interest, and that's the USA for 2019.
Well, I just finished that forecast. That's why I couldn't answer your questions before. Okay. And I just like to point out, in my new book, I made a big deal about horoscopes of diplomatic relations. First of all, if you go to the State Department's website, Office of the Historian, they've got the date of the beginning of foreign relations between America and every foreign country. And I had pointed out on your show, I think months ago, that the beginning of relations between Russia and the U.S. was back in around 1804, I think, and the sun was at 20 degrees Cancer, and that's exactly where the eclipse was last month. And 6 months ago, I said that the big story was going to be U.S.-Russian relations, and 4 days after the eclipse, I think Trump and Putin had their meeting. So that's how powerful those things are. So Pluto is going to hang around and keep opposing that sun. So I don't think there's any easy answer here, and I don't think we're going to come up with some great deal. It's going to be very contentious, and Trump is not going to back down. They're not going to back down. So right now, we've been sending arms to the Ukraine, and so it's back to the old Cold War, which I never really thought ended myself. So what's coming up next? And what's coming up next year is China. The eclipses in January and July of next year activate the horoscope of the beginning of Chinese relations with the U.S., which is back in the 1800s. And about a month, 6 weeks after that, they signed their first trade agreement. Both of those horoscopes are hit. And let me just say that the next eclipse that's coming up in January, which will be solar, is opposite the horoscope, opposite the sun in the horoscope of the United States. To have an eclipse opposite your sun is like getting knocked down in a soccer field. It reduces you in stature. It's the reverse of what happens when you have an eclipse conjunct the sun, which is, we'll have that very roughly next July. So that indicates things probably don't go well for the U.S. and Trump December, January, February. And I traced it back. Here are prior eclipses. Those are the dates: 1935, 54, 73, 92, 2011. So let's go forward one slide and just look at two of these cases. In the 1954 eclipse, the Sino-American Mutual Defense Treaty between the U.S. and the Republic of China was signed. The agreement prevented the PRC from taking over the island of Taiwan during the years 55 through 79. Now let's add 19, a metonic cycle, to 54, and you come up with 73. That links the two eclipses. Nixon removed the troops from Vietnam. China was also in the news because following his visit to mainland China, the United States and the PRC agreed to establish liaison offices. This was the reverse of 54's actions in relation to Vietnam and to China. And so those are the connections to China. Plus that, if you will go to the next slide, look at the path of the eclipse in January. It's visible sort of, roughly from Alaska all the way to China and Russia. So this indicates that these issues are not going to go away soon. And to just jump back to horoscopes, and if you go to slide number 16, China and the USA first established diplomatic relations 6/16/1844, one day after the partial solar eclipse on June 15th, 1844. Shortly afterward, the pair signed a treaty on July 3rd, Treaty of Peace, Amity, and Commerce.
Mm-hmm. Wow. Bill, this is really great,
Yep.
buddy. Could you stay with us? Because I would
Sure.
like for you to tell the folks
finish up.
about your book. Yeah, that's right. We got another couple of minutes. 877-927-6648. Bill Meridian, Cycles Research, Vienna, Austria.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We're talking with Bill Meridian about his new book. Bill, you want to tell the folks, I've posted the picture of the book, and why don't you go ahead and tell the folks where they can reach it and what it's about?
Yeah, well, it can be purchased at BillMeridian.com, and it is the result of I've been writing the monthly political forecast for Dell Horoscope since 1990, so that's almost 30 years. And I started studying it before that because Charles Jane was my teacher. So I sat down with some friends and they said, Bill, why don't you write about it? And I said, well, I threw out a few things. And they said, well, people, what you just said, how do you assemble a database? Then how do you scan the database? So it starts with that. Then what do you look for? How do you, out of all of those horoscopes out there, how do you know which ones to focus on? And that is what it is about. And it also includes map methods such as eclipse paths, astrocartography, and it gives case studies. And I have one chapter called Predictions, Correct and Otherwise, which goes back to the unsuccessful attempts of astrologers to predict World War II, but there was one successful one by Elizabeth Aldrich. So I explain how she did that. And that is what it's about. And what you see here, the U.S. and China, I have a monster database, and I just added all these horoscopes of all the dates of the beginnings of diplomatic relations between the U.S. and foreign countries. So I can scan that just by pressing a few buttons to see which ones will be activated. And I caught Russia for this summer, and it is increasingly going to be, the story will be China, although Russia is not going to go away.
Wow. What do you think about Russia as a not a political power, but as a military power? You know, we hear a lot of different things that, you know, they're just a fraction of what they used to be. What's the really story about that?
Well, Jim Dunnigan and I disagree on this when I see him in New York. We always get pictures of rusting submarine yards and things like that. You know, they're very famous at using deception, and there are whole areas that are off limits to the United States and the inspectors.
Hey, Bill, thanks for joining us, my friend. We'll have you on again soon, my friend.
Okay. Looking forward
Thanks
to
a
it.
lot,
Bye-bye,
buddy.
Larry.
Really appreciate it, buddy. Bye-bye. Bill Meridian, Cycles Research, folks.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks!